What's good, everybody? Welcome back to another video. In this video, we're going to be going over supply and demand strategy, which this is the third strategy I use. The previous two strategies and this one are the only ones I use. Sorry if I sound stopped up. I'm a little sick right now, but I promised y'all I would get this out by a certain time. So I'm working on it, and I'm gonna do this for y'all. I'm a man of my word. I keep my promise. But in this video, we're gonna go over supply and demand, like I said, and I will also reference the guy I learned this strategy from. I will reference his YouTube video in the description. Supply and demand is a very strong strategy, pretty much because you are going to be trading with the smart money. So with the smart money, that's just the banks, the hedge funds, the market makers, people like that. We're considered retail traders, so we don't have uh, any pull in the market to make it go up or down the way banks, hedge funds, and XYZ does. But without further ado, we're gonna go hop into these charts, get some examples so I can explain this better. And again, like I said, I referenced another video just in case you need a second perspective. Uh, the video I'm referencing is a great supply and demand video. He does a lot. His main strategy is supply and demand, versus mine is the breakout strategy. But I do have this in my arsenal because I do look for it. But let's hop into these charts. Real quick, if you're looking for a new broker or looking for a broker in general, try Liquid Brokers, my favorite broker. They have low spreads starting from zero. They have cheap commission fees. They're a regulated broker as well, so your money is protected. And they have different chartings that you can use and whatever best fits your trading style. Fast withdrawals, fast deposits, whatever you want. So yeah, check out Liquid Brokers. All right, so I have two drawn out examples right here. Pretty much what a supply zone is when you see the big push down to the downside, that's considered a supply zone. Mainly the people who are moving the market this way to make a big push are, like I said, banks, hedge funds, market makers, pretty much the whales in the market. Usually when you see a supply, and this here is a demand zone. So it's the same thing, just the opposite. So you get a big push to the upside. Excuse me. You get a big push to the upside from the banks, hedge funds, and everything. And then what you really want to see when things like this happen is you want to see a tap back into the zone, either supply or demand zone. And once you get that tap back into the zone, that's when you either short the market or you long the market, because you want to trade with the smart money. So, for example, here we get the big push to the downside, we come up, and we coming up pretty slow, and that's what you want. You don't want a big push down like this, and then you don't want just an immediate push up like this, because usually when that happens, it's gonna break through and keep going. It doesn't happen all the time, but usually if I see a big push back up, I don't want to take that trade, take that short, because I feel like it'll break through. And at that point, you switch to the breakout strategy. But you want to see a slow climb up towards the supply zone. And then I usually use my entry criteria. Some people enter right on the supply zone. I don't. I usually enter once I see a market structure change or I see the supply zone broken back to the downside. And then same thing here. See a big push up, see a slow climb down, back to the demand zone, and then this is where you want to take your long position and trade with the smart money going to the upside. If you see something like this, like just a big push up and then a big push down, I wouldn't take that trade. I would then be looking to switch to the breakout strategy of that zone. Also, what you want to look for when you're looking for a supply and demand as well is a fresh zone. What I mean, like a fresh zone, is when we get the push off, you want to see only one touch into the zone. and then you want to short the zone. Now, if you see something like this, you get like this touch, and then you get this touch. I probably wouldn't short on this touch. I will only short on the first touch because this is a fresh zone. If it's already tapped into it, um, I don't want to short it twice, if that makes sense. I only want to short it one time. So if I came in, I seen this already touched, and then I seen this already touched, most likely I'm not going to take a short position because the zone is already pretty much getting weaker. And same thing for a demand zone. If I see it touch more than one time, I don't want to take the position just based on the zone is already getting weaker. Now, you can use other confluences to make that decision. Typically, if I see it going to a demand zone, I would then, just look at all my other confluences like trend change, market structure, support and resistance. I almost said supply and resistance, support and resistance, and things like that. But enough for these examples. Let's hop into the charts. I've already had examples drawn. I was just gonna draw them fresh, but I'm not feeling good at all. I went ahead and drew them so that we can just go through it and see what we got. All right. So when I look for these zones, like we have a demand zone here, which I like. I want to see 3 candles minimum on a strong push up like this. So once I get to 3 candles minimum on a strong push up like this, you want to see something called imbalance or fair value gap. What that is pretty much price did not feel, the market makers could not feel that price. So I've already got my presets and stuff. You can do this in TradingView yourself. So I'm gonna go here, go to imbalance. What the imbalance is you pretty much have a candle where the wicks do not cover on any side. So this is a pretty strong imbalance right here. So right here you get minimum 3 candles, and then you see a strong imbalance where wicks or price did not cover within this candle. Again, you want a minimum of 3 candles, or I look for a minimum of 3 candles. I look for a pretty strong imbalance. Once I see the pretty strong imbalance, I like to see a break of structure as well, which we broke structure right here. We broke structure right here. So we broke structure on 2 parts here and here. All right, so I like to see we have a minimum of 3 candles. We have an imbalance here, and then we have a break of structure here. Let me see if I can draw this for you. We have a break of structure here. We also have a break of structure here. I love to see the break of structure. That means this zone is pretty strong. The way you draw the demand zone is the candle before the green candle and before the push up. You draw it from wick to wick on the red candle. So it'll always be this candle here. So we get the green push up candle, get the imbalance, get the minimum 3 candles. You want to come to this red candle where I started it. You want to draw it from wick to wick. That'll be your demand zone. Drag it across. Once you drag it across, now you will see where you want the demand zone to touch. And see, this is exactly a good reason why I don't take a trade right when it hits the demand zone, because if it hits the demand zone and I took this long position, typically I would have got in here, stop loss would have been right below the demand zone, and I would have targeted somewhere right here. Because if I look left, structure leaves clues, or I would have targeted up here. I usually have multiple take profits set, but let's just say here for the video's sake. If I would have got in, this trade would have taken me out here. So what I like to see before I get in trade off the supplier demand zone, I like to see a market structure change. We have the lowest low here, and then we have a higher low here. What I would do is once I see this higher low come in, we have another higher low here, and we have a push to the upside. I would have taken my trade as soon as I seen this higher low. Third one in a breakout of the demand zone, I would have taken my trade there. Stop loss right below the demand zone. We're targeting structure. Here, we have a good 1-to-2 ratio, 1 to 2.19. If you want to target here, because it did hit there, we have a target of 1 to 3.33. Typically, I target 15 minutes. This is on a 5-minute chart. Typically, I like to target like a 15-minute. Take profit is a 15-minute, and if I wanted to target this 15-minute, I could have done that, which would have gave me a 1 to 5.5. So that's how I enter on demand zones and supply zones. It's just the opposite for supply zones. And this strategy works on any time frame you use. So if you're a swing trader, scalper, whatever you are, it works on any time frame. To me, supply and demand zones don't happen very often. We have a nice actually supply zone here. We get a strong push to this downside, but we get a strong push to the downside here. So if I would have drawn this supply zone there, we get a strong push to the downside. We come up, we almost touch it, but we didn't quite get there. Some people wouldn't have taken a trade on that. As soon as I seen market structure change here, I would have taken a quick short and I would have just trailed my short. But then we come up and touch it actually. And once I seen this market structure, once I seen this here, it comes up and then it starts rejecting. I would have took my short right then and there, so off that rejection. But I would have had a pretty tight stop loss. I would have just targeted right above the structure. And then since I have this to the left, I would have had a 1 to 3 ratio. Every trade is going to be different. You can't just sit and think every trade is going to be the same. Some of these zones will be ugly, some will be perfect. We actually have one here as well that we haven't even came back to touch yet. You get a strong push to the downside. Personally, I drew it here because this is where market structure broke. And we also have a lot of imbalance here because remember, we draw the imbalance where the candle, no wicks on each side of the other two candles. So the candle before this one has no wick covering this body of this candle. And this candle has no wick coming up to cover the body of that candle. So to me, I drew the supply zone based on this doji candle here. But I like the imbalance here and the imbalance here. It's pretty strong to me. We haven't come back up to touch that supply zone. But here we have another one. It's a decent supply zone. We have 3 candles pushed to the downside. A lot of imbalance in these candles. The thing with this one is it came up, it went into consolidation. Just because it comes up and touched the zone doesn't mean it's automatically going to go back down. Sometimes it goes into consolidation. But typically, if you would have took a short position on one of these, I would have waited until market structure broke. So once I seen up, it's tapping, it's creating a support and resistance. It's literally creating a support and resistance. I would have waited until this market structure here broke, took my short. I would have targeted right above structure. My first take profit would have been here somewhere. You get a 1 or 2. Typically I trail my trades. So even if I would have got the 1 or 2, I would have waited. I would have just trailed it until it came down. As soon as it hits about right here, and then it pushes back down, I move my stop loss to break even. Now I'm in a risk-free trade. Then eventually I would have moved my stop loss right below or right above this structure here. Then I would have been in a profitable trade no matter if it reversed on me or not. And then I just trail it on the way down. Most likely I would have took my money if I got way down here because I don't get greedy. So that is another example of a supply zone. Let me see if I can get to another example for you. We have a strong supply zone. And this is one of the supply zones it happens, but it's rare that it happens. You just get one strong push to the downside. So I drew on this green candle here. We have a lot of imbalance in this candle, and I'll draw it on there for you. So we actually have a lot of imbalance in that candle. Again, imbalance is where price didn't fill. All I'm waiting for is a come up and a touch into the supply zone, which we got here. And once we got this touch into the supply zone, as soon as this structure broke here, I would have taken a short. And once I take the short position on this break of structure here, I target right above there. Some people target above the supply zone. I like keeping my stop losses tight because typically I usually hit 1 to 4, 1 to 5 wins on risk to reward ratio. But I would have taken this trade here. I would have put my stop loss right above the structure there, the market structure. And then as soon as we come down, I'm in this short, we come up, we make a new lower high here, and then we started to push back down. I take my stop loss, move it to break even, and then I just trail. So eventually, if I would have trailed my stop loss down to here, I would have been in a risk-free trade, a profitable trade. So as soon as it reversed, it shot up. This is a beautiful demand zone actually, right here. And this is a beautiful supply zone right here. So this demand zone, we get a strong push to the upside. It was a slow push, but it was a strong push. So I come in, I identify my candles. We got imbalance, 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 no imbalance in this one. So we got the imbalance here. We got some more imbalance here. We got a little bit here. Then we push to the upside. So I take my demand zone. I draw it on the candle before, this red candle before the push up. And what I'm waiting on is us to drop it. Now, this was a risky trade. This would have been a risky trade if you would have got into this demand zone because of how strong the push was to the downside. Because we actually have a strong supply zone here as well, which I'll actually draw that for you. On that green candle before this push down, you draw it to the downside. But as you see, I'm gonna go ahead and extend this to the right. So when we're ready to find our entry point, we're good. So we got back down to this demand zone. What I'm looking for is we got a higher low here, and we got a higher high that breaks even with this high. So what I want to see is a push down. And as you see, when this pushed down, we created another higher low, but we also pushed down into market structure and bounced off. So once I seen that we're pushing there and we're starting to bounce off that market structure, I would have took a long position there. And I'm targeting the supply zone because of how strong that push was. So once I see that, I put my stop loss right below this market structure because if it breaks that, it's signaling a trend change. And eventually, you would have been in this trade a while, but eventually you would have hit that supply zone. Now, for the supply zone, you could have shorted off of this supply zone. So we're creating a support zone here, right? So like I said, some people enter right off the supply zone. I don't. We're creating a support zone. So what I want to see is a break of this support zone. Once we break here, what I want to see is a rejection. A pullback, and then a rejecting candle off of this break here. Once I see that, I take a short position, move my stop loss right above previous structure. And I'm not targeting the demand zone just because we already tapped into it one time. I don't want to see it tap into it twice. I would target like a 15-minute zone. So if I jump to the 15-minute chart, we're over here with it. So if I jump to the 15-minute chart, my target would have been somewhere in here just because of having the consolidation here that we got, and then the breakout. So we have 2 points of interest that made like a small support zone here. So I would have targeted there and won a 1-to-5 risk to reward ratio. So that's pretty much the supply and demand strategy. Again, I referenced another video in my description. He posts multiple supply and demand videos if you need to get a better understanding of it. So just tap into his videos, watch his videos if you need to. You can comment on my videos as well. I'll try to explain it more if you want me to post more videos on supply and demand and stuff. I'll do that. I'll also post videos on what I look for when I'm waking up, when I'm trading, or when I'm looking into getting into a trade. The time frames not the time frames, the times that I look at trades, because you don't have to be in charts all day. You can set alerts in TradingView to, if you do supply and demand strategy, if it taps into the supply or if it taps into the demand zone, just set an alert saying, hey, it's tapping into the demand zone or supply zone. TradingView allows that. You download it on your phone, it'll send the alert to your phone once you download TradingView on your phone. So this is the supply and demand strategy. This is another one that's in my arsenal that I use. So I have the support and resistance strategy, I have the breakout strategy, and I have supply and demand strategy, which all of them are pretty strong strategies. Usually when I look for a trade, I look for all three strategies. That way I have multiple confluences. I have pretty much the same entry points: a break of structure, break of support and resistance, or bounce off the support and resistance. It just depends on, how you want to trade it. So them are the three strategies I use. I will be, posting the videos of, how I enter my trades and stuff, or my trades for the week as well. That way you can get a better understanding of how to put it all together. Again, sorry, I'm sick right now, so just bear with me. I know I sound messed up and I can't even think straight. But again, appreciate you tuning in, and I will see y'all in the next video.